Hope everybody's doing okay. This is Ed Ponsi, your FX educator on behalf of FX Street. Once again, great to be here. Great to be back as we give our second presentation of the day, our second 30-minute presentation. Hope everybody enjoyed the first one. We laid out a setup for the Australian dollar Japanese yen currency pair. Yen is pretty interesting pair today. Yen showing strength early on as stocks are down, and that's not unusual, but already stocks are starting to come back, and we'll see if that continues. That's been the usual activity. It seems the pattern is that stocks go down and then buyers step in and push it back up. Now, I don't know if that's going to continue to be the case. What really drove stocks higher, in my opinion, higher and higher and higher, was the prospect of tax reform. Whoops. Fix this. There you go. So what drove this market higher and higher and higher was the prospect of tax reform. You can see it just going higher and higher. Now we're at a point where it's put up or shut up, as they say here in the States. Now you have to come through and actually create the tax reform. And I don't know if that's going to happen, right? It's impossible to say if that's going to actually happen or not. And I don't know if it will. And if it doesn't, I fear that stocks are going to tumble, right? And because they've been pricing in this tax reform now for weeks, maybe months, right? We've just been going straight up almost. And I feel that we've been going up because they're pricing in. In other words, if corporations pay lower taxes, that means they're going to be more profitable. They're going to have more money toward the bottom line. So they're basically making these companies' stocks go up under the assumption that the companies are all going to be more valuable because they're going to pay less taxes. But what if it doesn't pass? What if none of this is able to pass? If none of this is able to pass, then guess what? The market would have to then price it out. Whatever they priced in would have to be priced out. And that would mean that the stock market would have to go back down. And so that would hurt which currency the most? Do you think that would hurt the most? I think it would hurt the yen the most. That's kind of why I was looking at the yen pairs this morning. There's always a sort of game plan cooking in the back of your mind somewhere. In the back of my mind, I'm thinking, you've had this amazing rally. I mean, look at since mid-August until now. You've had this incredible run based on an assumption. And if that assumption turns out not to be true, I think you have to go back down. We could go down rather quickly. Right? So it's 6 of one, half dozen of another. If the yen gets stronger, our Aussie yen trade never would execute. On the other hand, we should probably be setting up a dollar yen trade in the opposite direction. That's something we could also look at. We can have more than one trade in more than one direction. And we'll see which way it goes, right? So we have we can have more than one trade in more than one direction, and there's no guarantee that any of them are going to execute. The problem with dollar yen has been the way that it's been range bound. for far too long. I love the idea of shorting dollar yen up near 114. Unfortunately, it only got up to 113 today. 114 is the area to short it. You can see the chart. It's very self-explanatory. There's a lot of resistance at 114, a little above 114, I should say. If it gets to 114, in my opinion, that's close enough to start shorting away. But today it hits 113 and drops. So we'll see what else is out there. What about the euro yen? This has actually been trending higher quite a bit. It doesn't really look that great to short, quite frankly. Now, pound yen is something where we already had a short setup. We can't seem to get it through resistance to fire off the short. The trigger is 147.55. The low today, 147.71. The day before, 147.85. The day before, 147.76. There's a lot of support just above us where I drew this line. Now, this makes perfect sense to me. We're not going to enter the trade unless support breaks. And if support does break, things could get ugly, and that's fine with me. Because if support breaks, we're going to sell short. We want things to get ugly if support breaks. So we've got a pound yen short setup, and we've got an Aussie yen long setup. But Aussie yen, we won't be able to get long unless we break out to the upside. And pound yen, we won't be able to get short unless we break down to the downside. Makes sense? Big red candle today on pound yen and on most of the yen pairs. Why? Because stocks are down. And we explained that relationship earlier this week, that when stocks are going up, there's not much of a relationship between the market and the yen. But when stocks are going down, the relationship does seem pretty strong. And you're seeing that today. Okay, this global stocks, all around the world, stocks are down. Combination of things. I would say the situation in Spain is part of it, but also stocks in the U.S. Maybe already doing a little bit of selling ahead of, whether or not this tax reform bill passes. Today's a big day for that. Today's a big day because today is they're going to vote on a budget, and that's preliminary to the tax reform passing. Do they have the votes? Good question. Good question. Some more of the yen pairs. New Zealand should be interesting. New Zealand, big red candle. Too bad we're not short this one. But this has more to do with New Zealand than it does with Japan. New Zealand formed a new government overnight. And the New Zealand dollar is taking a beating because of this formation of this new government. And you're reluctant to buy anything that's falling this fast and this hard, but there might be a point where we could step into something, and maybe not with New Zealand yen, but maybe one of the other New Zealand pairs, there might be a setup that's cooking that we could start to look at. But that's a pretty big candle on this pair. That's a nearly 200 pip candle. And if you look at this chart, I don't see a candle this big on the entire chart. So what the heck happened? New Zealand formed a new government overnight. And obviously the market is not too keen on this. New Zealand is going to be led, the new prime minister is going to be Jacinda Ardern. She's 37, of the Labour Party. And what happened is a minor party threw their support behind her. She only took charge of the Labour Party 3 months ago, so she's like out of nowhere, right? And suddenly, she's the prime minister. 3 months ago, she became Labour's youngest leader ever. So it's interesting, right? So the market, I don't know what the market is trying to say here. Maybe it's just that she's an unknown quantity, right? There's your big red candle on New Zealand USD as well. Now, I was hoping this would push us down into a place of support, but it's really not happening. This was actually trending downward earlier. I think it's safe to get rid of these channel lines now. They're no longer really that interesting. But this just continues a downtrend for us, unfortunately, I say, because we missed the ride here. It's a lower low in a series of lower highs and lower lows. Whenever I see a shocking move like this, I'm hoping that it's creating a higher low, which would make it buyable, right? But it's creating a lower low, which is not really a buyable situation. It's not really something you'd want to buy into. At least not for New Zealand USD. How unfortunate. This is something you'd want to short. So I don't know what the world is saying here. Maybe it's just uncertainty. But huge red candle. New Zealand down hard. Aussie New Zealand. We'll take a peek. Look at that candle. And again, it's a higher high in an uptrend, so it's not really tradable. A little bit frustrating, gang. For so often, these big moves create opportunities. You want to fade them sometimes, right? It's easy to fade them, but if I fade this move, I'm going against the trend. I'm not sure that I'm keen to do that. Euro Aussie. No big candle here. Whoops. It's because I'm looking at the wrong pair. Euro New Zealand. Oh, there's your big candle. And again, it's a higher high, so it doesn't really help. What you're hoping for is that it pushes into a lower high or a higher low. So far, we haven't seen that on any of the pairs. So New Zealand was already a weak currency when this happened, and today's events just make it a little bit weaker, well, a lot weaker, in one shot, as they say. Pound New Zealand. Actually, the most interesting chart yet. This pushes into an area of resistance. See this? It's like a thicket of resistance up here, and you're pushing right up into it. If there was any of them that you'd want to fade, it'd be this one. Weak against weak, I think you could say. Of course, you don't want to get, I already have a pound yen set up. The last thing I want to do is get a whole bunch of pound trades going at once, right in the middle of a Brexit negotiation. One is enough, thank you. But if I were looking, this is kind of interesting. You've broken above this resistance area here just a bit, and you're into this other separate resistance area right now, which means to me that this could fade back into this area. This could turn into a wick. And that could be a 100-pip wick. It could be good for an intraday short if you're nimble. But again, you've really got to be careful with the pound right now, because there's just a little bit too much drama playing out with Brexit, right? It's just so much drama. How about Swiss New Zealand? Incorrect symbol. NZDCHF, perhaps? There we go. Okay, if anything, this should bounce. Look at that. Support. Finally found one that could be feasible for a buy here. I'll make it a weekly. Could be feasible for a buy. New Zealand Swiss. It's about time. Huge drop. Just going intraday here so I can get a feel for when this started. This started during the Asian session, so the Asians have participated, the Brits have participated, the Europeans have participated, and now the Americans have participated. It seems like everybody who wanted to participate has participated. That's what am I talking about? Well, you want to give everybody a chance to wake up and play the game. Let's say that, you know, for whatever reason, everyone decides that this election is a bad thing for New Zealand dollar. I want to make sure that the Asian traders have had their shot at it, and they have, as this began falling at 2100, 9 p.m. my time. That's right in the middle of the Asian session, or fairly early in the Asian session, mid-morning. So the Asian traders had their time. And this was falling also during what is normally what they call the dead zone, like when the Asian, when it's really quiet prior to the opening of the European markets. Usually they're just most of the currency pairs are just drifting sideways. This is not drifting sideways. This is plunging. So the Asian traders definitely got their shorts in. And then the European traders definitely had their opportunity to get their shorts in. Here's 8 a.m. The American traders get their shorts in. Everybody's had their opportunity. So it could continue to fall, but at least everybody's had their chance. So if it does continue to fall, here's how I'm looking at this. You see where I drew this line? That's the very bottom. There's nothing under there. See what I mean? There's nothing underneath. So it either bounces or it breaks, right? So why don't we set up a trade that if it breaks, we have nothing to do with it. But if it bounces, we catch the bounce. That is a lot of room to play with here. If we can catch this correctly, how much ground are we talking about? Because you know I'm thinking of somewhere around here for an entry. I want it to come back up. I want to catch this on the way up so that if it keeps falling, I'm not even in the trade. You see what I'm talking about? I don't want to, if this keeps falling, I don't want it. Because there's no support under me. At least not, there is some, but it has to keep falling for a while to get there. And that doesn't interest me. I'm only interested if it turns and comes up. The line is 68.45. The plunge begins at 70.25. So we measure 7025 minus 6845.
180.
Okay. $180 pips. 10% of that is 18, and I'll round that off to 20. My entry is going to be 20 pips above 68.45. That's 68.65. My stop is going to be 20 below 6845. That's 68. 6825. Stop is going to be 6825. Again, entry is, again, 180 is the distance of the drop. 10% of 180 is 18. I'm rounding that 18 to 20. 20 above this line, 6845, is the line. 20 above that line is 6865. And that's my entry. $20 below that line is 6825. And 6825 will become my stop. So right now you're sitting at 6845 with the price. If it just keeps dropping, there's no trade. It has to come up to get me in. Which means at some point, traders would have to believe that they've overdone this selling. My ultimate target would not be 70.25. It would be 20 below, which would be 70.05. But wait, there's no way I'm putting my target just above a huge round number like 70. So my ultimate target is going to be 6995. So I'm a huge believer in the power of those round numbers. I'd feel pretty dumb if we hit that round number and fail to make it through. So my target is just beneath. If I were to just go with this as it is, I have a target of 130 and a stop of 40. That's better than 3 to 1. But I'm also going to use it. Why not join the sell side when it retraces? That's another way that I could play it. But and that's not wrong, but that's not what I'm choosing to do this time. But you could easily do that, and that's not a wrong thing to do. My second target is simply going to be the halfway point between 68.45 and 70.25. Half of 180 is 90. So add 90 to 68.45 and you're going to get 69.35. $6,935. And there you have it. There's your other target. So it's a 3 to 1 setup, slightly better than 3 to 1 setup. Looking for the retracement, but if I just get halfway to the retracement, I'm going to take half of the trade off the table and bring the stop to break even, so I'll have a winner if it gets there. If the price keeps dropping, the entry is never triggered. Okay, and that's my little setup for New Zealand Swiss, just in case they've oversold it here on this election news. And boy, have we ever seen that happen before, right? Where markets get carried away on an election. And we saw that on Brexit. We saw it in the US. We've seen it in so many places. So we're kind of assuming that, maybe the markets have overdone it here. Okay, but Abdul is not wrong. You could play it the other way. You could say, hey, if it bounces back up, I could join the sellers. And that's not necessarily incorrect. That may also work. So that could work just as well. Okay. All right, everybody. Hey, 2 great sessions today. I hope everybody enjoyed. And that's going to wrap it up for today. So thank you so much for listening. This has been Ed Ponsi, your FX educator here on behalf of FX Street. Thanks again for listening. And I'll speak to you again very, very soon.